Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording on October 11th, Friday the 11th, about an hour before the close. On today's show, the cycle window is wide open, and we're going to review what are the possible paths that the markets can take. My name's Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. How we doing, Barrie?
Doing great, doing great.
Ready to dive in and see what the cycles are the window's gonna look like for most of these markets that we're following.
Yeah, let's do it. It's been a good week, and let's cap it off.
Yeah, we got some movement, so now we can start getting some odds on different paths here.
Absolutely. All right. Let's start with the cash. So far, we've been watching how it was consolidating right below this 270 degrees up from the low in October. This is on the cash chart.
Hmm.
And that was right around what 56.73 level. We were trying to see if that high we got in July could hold. Remember that
Hmm.
one?
Hmm.
And we came up, couldn't do it, came back around again back in September. And that's when we actually made the jump, got on top of 56.73, sort of held it very nicely. This is sort of a textbook example of what we mean by, getting above and holding above a
Hmm.
level.
Hmm.
So perfect. And from there, we started moving higher. So while we got stuck, so we had this first jump, and then we were taking some measurements from some other points, and then we had another point at 57.50. So we were really stuck between these two lines for a while, a couple of weeks.
Yeah, a few weeks.
And what we were trying to figure out was, we trying to do like a false break and just roll over, or are we going to continue to hold above 56.73 and move higher? And I remember talking about this idea concept of what happens when cycle expirations extend. Let's just say another way.
Hmm.
That's put another way. What I mean by that is when a cycle high comes in, like we did in July, what happens, if there's another cycle, because we did have some other couple of other cycle highs coming in September, which were super, legit. They came in perfectly textbook. Now, what happens when they get taken out? Usually, historically, what happens is it just means the market has higher to go, obviously. Just have to let it go and trade in that direction. And those things matter most when it happens at key inflection points,
Yep.
um,
Decision points. Yep.
decision points. So that was at 270. And the other time we had to deal with this type of behavior was at the 180, where, we kind of spend a little bit of time here.
Hmm.
Also at the 50% point. So it's a common pattern and a theme we have to deal with all the time. So nothing new. But I wanted to start with that, showing where we've been, so we kind of can understand where we're going, more or less. Because we got this high come in pretty perfectly, this 90-degree high. That squared out. So when a square happens at the time we were talking about, once a square happens, especially a 90-day square, that's almost, picture perfect. You're
Hmm.
looking for, a decent correction. Maybe at least to 50% of the square would be normal. I mean, a 3-month correction would be sort of back to, textbook ideal. If it doesn't, we were talking about how, if it gets on top and basically breaks out of that square, it really opens up a whole nother section. So that's another thing to keep in mind. So then we were watching it. Of course, we got on top of it in September, and the problem is we really didn't take off. We were just hanging around.
True.
So it wasn't a momentum indicator. Everything is the people that watch momentum, you can see, momentum basically died,
Yep.
up in there, just waiting. So then we were, these are all different techniques we applied to try to ascertain what's happening. What can these different aspects tell us? So then we were looking at it from the last, the high, low before the high, and what happened there. We were up 45 degrees, and we were stuck perfectly below this 57.50 area. So we were, stuck between 56.73 and 57.50.
Hmm.
And then we slowly started to make higher lows like this. The red bar that you can see on the screen was a higher low, and we finally broke out this week. So once we do that, the idea is then we got to look. We were watching to see, well, is that a false break? Was it just going to peak one day and then reverse like we've seen lots of times? Or does it have some legs to continue? Well, it certainly looks like it's got legs to continue. And now we have a couple of really solid support levels here, 56.73.
Mm-hmm.
And we have this 57.50. That entire area we were sitting on top of is not now support for different reasons. 57.50 because we have a nice floor now, all that trading that was going on right under it. And 56.73 because this is where the old, the square came in. So that high is also important.
Mm-hmm.
Just happens to be the lower part of the boundary right here.
Mm-hmm.
So what happens next? What happens next is we're expecting the market to trade higher, just like we were expecting once it got on top of the 56.73 level.
Mm-hmm.
And we were, so when that happened, we already had this 58.48
48.
level for the cash drawn out, and that's 90 degrees up. And that seems like the next reasonable sort of level to watch in the midst of all these different cycles overtaking and pushing and pulling. And that looks like, I mean, if we go for the, just for the price, we have 58.48. And so just mark it down. That's the resistance. Can we go a little bit above, a little bit below? Sure. 58.80, that's the range of there, 50 to 80 to give it 30 points in there just for, just to make sure.
Mm-hmm.
And time wise, if we take it from there, November 3rd just happens to be 90 days, 90 calendar days, trading
That's
days, calendar days.
crazy.
Yeah.
2 days before the election.
Yeah. That ends up becoming a high. So we'll see what happens. That's just how it's rolling. So let's keep all of these things in mind. So what do we got for next week? I would say what on the cash chart, watch 57.50. If we can hold above that, I mean, we're definitely hitting 58,
48.
58, yeah, 48, let's say 58.50 to round it up.
Mm-hmm.
We're hitting up in that area. If we get above that, obviously we're going to go at least the next 8 or the quarter square to the upside, but it kind of opens everything up. So as far as pullbacks go, if we get a pullback to 57.58, like I said, 57.50, it's in great shape, and that would be kind of a deep pullback too. It wouldn't be just a little shallow thing. So I would watch that. And technically, forgetting news and this and that and the other cycles and everything else, technically pulling back to 56.73 would still be part of a normal correction in an uptrend. So
sure,
you have to keep those things in mind. This is the part where it gets a little bit difficult. By the time the daily confirms, it's going to take a bit.
Mm-hmm.
But then again, we don't know the next action for the next 5 days. So let's wait and see. A lot of things can happen in 5 days. 5 days. The pattern of the bars can be bizarre, right? They can
Absolutely.
so we just don't know. But those are I would say these levels are the ones you really want to watch. And the reason 56.73 is important is because it was 270 up from the October low, which is kind of where everything started.
Mm-hmm.
Now this 720 here, that's 2 cycles. And boy, that would have been a beautiful place to finish up a leg.
For sure.
Textbook wise, it's just perfect. But does it always work like that? No, but we'll find out how this one ends or continues or whatever happens next. We'll watch that. And for now, I'll just keep it on the low after the price squared out. So
sure.
It's a good frame to watch that, right?
Mm-hmm.
Anything you want to add to the cash chart over here?
No, I think that's good coverage. We just watch these levels and let the market tell us what's more probable.
Yeah, and your trend line, when I talked about confirmation, I'm talking about even the simplest of confirmations you'd have to wait till the one by one's taken out to be technically correct. Mm-hmm. And we're way above that.
Yeah.
And that's the other thing, when you know there's a key level above us, and we talked about this a couple of sessions ago, when we know we have a key level above us, it almost acts like an attractor,
magnet.
Magnet, and the price just get pulled into it, and you don't want to fight that. You just want to go with that and obviously trade it in that direction. All right, quick look at the futures. Continuation chart. Yep. I also broke out the futures into the continuation chart and also just these contract.
The contract, yeah.
Yeah, since we're only looking at it from here.
Mm-hmm.
So on the continuation, we're right at 90. All right, fine. Let's work with that, but we're broke above, held above, so nothing much to do at this point. So I want to go back to the D's contract, which is the proper way to measure this part since because of that big huge premium gap we had, on the continuation.
Right.
Based on this, we looked at this last couple of sessions, 58.92 area level seems like the place where we're going to go. So let's see what happens until we get above that. You have to expect it to be on the long side. And if you look at, I think with these lines drawn up, it's really easy to see where support is. The quarter square line is around 57.97 is pretty good support on any kind of a correction. Like, again, it's pretty far away. This is you would have to correct fairly deeply to get in there. But still, it's good. It's a very solid support level. Even down into here, 5,700, fairly solid. A lot of work was put in right in that 5730 area, right? These highs, these lows. So that's like a naturally a good level to watch here. Let me draw a line in there. 5729. All right, we can keep that. And the other level would be 5797. All right. So that's what it's looking like. Again, look at the one by one and where price is. We're just, we're rolling.
Chugging along.
Mm-hmm. 2 by 1s. Very steep. We're holding it really well. So it looks like there's more upside. Just stay with that. We're good here?
No problem.
All right, let's take a quick peek at the Dow while we're on this side of the neighborhood.
Finally trying to get away from that 216.
Yeah, and it's, last week it was sort of acting like it's rolling over, right? And we were looking at how tight that consolidation was. This is sort of a giveaway, anytime, it's consolidating really tight without any kind of a big pullback. There's a high probability we're going to break to the upside or in that direction. I keep thinking this is probably why, they say not to short or quiet market.
All right.
So anyway, we broke out and I had this area marked. We're going to run into, Dow's going to start to run into resistance up in here. So that's the resistance. There's a big block up here. And the midpoint of the box, if you guys want to know, is 43,720. And the upper boundary is 44,300. So that would be the upper boundary. Midpoint is there. The lower end, hell, we just tapped it today. So there we are. Take today's high. You can see that, right, Ben?
Yep. Right to the bottom of your little shaded zone.
And this looks pretty good because if you compare it to the one by one, we're really moving, in a solid way. We'll just all wait for the prices to hit these 90s.
That's what it looks like.
It does look like that. So that's probably what's going to happen. Let me look at the continuation. Always looks better from the points further out. So here's that 270 we were watching. It came back, retested.
Tested it.
Yeah, did pretty good. And then we have the going from the lower low, the sort of the false break low. That's where this 5682 came from. And you can see, I think we can work it from here because that levels all match up. If that's the case, we clearly have more to go. The 50% of the square is 6,036. So let's see if we can do that or not. Before that, we have 5892 marked here. So I would write that down as a potential area. And we can jump to the weekly, but what I want to do is look at the 30-minute really quick. Would that be okay?
Sure.
So here's the little chart that we watch.
Well, that 5814 was a good level all week.
Yeah, man, that level, and it was good all week. And look, if you look back, you can see how
couple weeks.
Yeah, September it was really good, and we had this bracket really well, right? We had the 5814 up here, we had the 5720 down here
on the bottom.
Yeah, and you can see how we held it for a number of days. We kept tap, right? Couldn't do it, and that was really the sign. We couldn't do it on this time, 7th, and we really held about 4750. Held here. Managed to hold up in here, and that's when we broke out. It was very deliberate kind of a move up. And here's another classic, example of price breaking above and holding above. And here it is. These are the counter trends where you can just pick off. It's very low risk. And well, from 5814, we started to move higher. we basically took 58.58, and we have we had a little bit of a triangle forming. Looks like we're really pushing into the upper end of that. So we'll see how we close. If we're going to push into a high close or a low close. But long as our basic thinking was long as about 58.14, we're going to push higher. Of course, these are resistant levels, but the big ones up in here, 59.02 or 58.86. So that's what to watch for. I mean, if you guys trade short term, look, 58.14 is really important next week. And and obviously 58.58, but another midpoint, these quarter squares are really good. I would say if we can hold above 58.34 basis the 30-minute, and those pullbacks can be bought unless we already tapped here and on the way back down. So that's the difference. This is on the way up, let's say.
Right.
And also these levels, guys, I always reference the chart, the time frame. So these levels should be just used with the 30-minute or lower time frames. And the daily charts are dailies, obviously cash charts are for the cash chart, so forth and so on. And that's it for the 30-minute.
Okay. Let's go to the weekly.
Yeah, let's take a look at the weekly. Give me 1 second.
It's trying.
It's trying, and is doing it. So what I thought was interesting is, we pull these lines. If you guys go back and look at other episodes we have, these lines we drop in. This 58.68 has been there, and you can see how we pulled up right. We're pulling up right next to it. Like we're going to park it there for the weekend. We're at we're 58.63 almost, and there we are. So did we take this out? Yeah, looks like we're taking it out, and that's fine. Only thing we have left is this 108-week count, which just happens to be around November 9th, which lines up with a couple of the other squares that we looked at. Remember that 90?
Sure does.
Ends up being about November 3rd. So there is a cluster of these times coming up towards the end of the month, beginning of November. So we'll watch those. Can we run up into that? Yeah, it's possible. Now there are some other cycles coming up next week, towards the end of next week, right? At the end of next week and the week after. So up until then, it's fairly clear. We have to just kind of trade the trend, which is just fine since we had a little bit of a break in the trend before this.
We had no trend for a little bit.
Exactly. So yeah, we're good. That's all I have for the S&P. I should do a cash weekly chart too. I think that'd be kind of cool to have.
Sure.
Reference. If you guys want to see a cash weekly chart, let me know in the comments, and I can work that up. That way, there's a good reference between the daily and the weekly for both.
On the cash, yeah.
Yeah, so it's a nice. I think it's a nice balance to have. I do have cash weeklies, but not on this set. All right, so that's that. Let's move on to bonds. Let's go on to the easy charts.
Boy, 5 straight down days.
Yep, and only if I can just hear what we talked about last Friday.
I was going to say we pointed out that perfect ABCD, and we said, listen, if it's exceeded, this is a perfect textbook example of what we're talking about. When these things get exceeded, they really go.
Yep. So there you are. I mean, I don't know what much more to add other than what we called out last Friday. We were looking for lower prices for it to visit this support level, and I remember saying 19.5 is probably where it's going to go. Yep. And that's pretty much where it went. Now what? Well, now it could continue to go because we do have a 45-degree level right up, from the October lows at, what's the level here? Well, 118.5. So, there's some support down here. It's possible that we get a couple of day bounce. So let that be it. But I think the general turn is probably to the downside, only because we had all that timing that came in up at, this 180, the 315 from the low to high. We had 135 low to high. I remember calling this out and saying, hey, these counts are kind of important. We have to watch it. So, and this is why we know when they all click into place, then
it goes.
And nobody's going to stop it. So that would be the daily. Any comments on the bonds, Ben?
Just that what we pointed out, remember that ABCD pattern when it gives way, because it's a It's a nice, easy trade to make when it
Yeah,
happens.
that was a good lesson. Hey, speaking of that, I wanted to know, what other thing that we talk about often is what we talk about inside bars, inside days, right?
Yes, yes, yes.
And we had one yesterday right here.
Yep.
And okay, let me get a better chart. There we go. I wanted to talk about this. Actually, I made a comment this morning, I think, on the open. We want to watch the high or low get taken out because that's going to be the direction. And we talk about these inside days a lot. And you can see how yesterday's, first of all, when you get a narrow day like that after a big expansion, normally the expansion continues after that. So here we took out yesterday's high and, it was just off to the races.
Yep.
Just want to show you that example of a inside day. When you mentioned the ABCD, just I remember.
It's a good one. It's a good example.
Yeah. All right. So here's weekly bonds. Well,
On support.
on support 144 down from the high back in 2020, man. Look at that. But you can see how we're kind of crowding around this 144. We tapped it here, came back through it, came back through it, so this area seems to be the deal. And once we settle to one side of it, I think there's a little bit more to go. I don't think we're all done with this in the coming years, let's just say. And I wouldn't put it past to go 180 degrees down. So let's see what happens. For now, look, we came perfectly. And this is why, we have support here on the daily. Yeah, a little bit below, but here we definitely have decent support in this area, especially if you look at this little cluster, back from earlier this year. So there is some support here. And that's, so, if you're short, take some profits and do your thing.
Right.
Right.
That's right.
And well, when this all got started, we weren't sure what the hell was happening. So here's the ABCD that we were thinking it might get to. Didn't quite get there. So I'm going to go and delete that.
Yep.
What other things happen? Well, what other thing that's coming up is, we have this trend line. Let me extend this. Sometimes we tend to forget lines, we have drawn in. But the reason I do a bunch of lines and keep them short is just to remember, these things work out. So anyway, we do have a big trend line, and if we take that out, clearly, we have lower places to visit. So you can draw that in and keep that in mind. And I'm going to delete that. Save my chart.
There you go.
All right, let's get back into the daily. What a show!
Another higher low.
Another higher low, and we held above 73.50 in a pretty meaningful way, I would say.
It even pushed that one day. It swept all
right
the
here,
stops.
right?
Yeah.
I remember talking.
I saw it. It went down to like 71 and change, and then reversed hard the same day.
Yep. So the story here is, if you guys have been watching us for a while, the story. We came down. It did a full square. We were looking for a bounce, and this is how the bounce came about. Now, just to keep it short, I think if we can hold above 73.50 next week, the 73.50, 79.50 becomes our new sort of the what would you call it, value area.
Yeah.
And well, obviously, getting, we've been talking about this earlier. It's 70, we need to get above 79.50 for it to really have to be primed, let's say, and to really move in a faster way. So long as we're below that, but above 73.50, it's still kind of primed, but it's not, let's just say, afterburner mode,
Right.
So this
not
is
as robust.
Yeah, exactly. So here, it's positive, more positive than 64 down, being trapped in this sector, this block. So this is more positive. So let's see how it works out. All the indications are, this is looking pretty bullish because the higher lows, higher highs, looks like it's trending up. So we'll watch that. We do have a trend line coming down. So 79.50 is really the big thing. And I feel like we're probably going to consolidate here, but you guys know the bracket now. So that's easy peasy.
Yep.
All right, let's take a look at the weekly crude. What a calm looking chart, for the amount of drama that goes on around crude.
It's sideways since end of April of 22, really.
Seriously. I mean, this chart looks like an angel, right? Like, oh, nothing's happening. It's just right? Very calm and
right.
Kind of a collective market.
Right.
Anyway, what happened was we got back into our little bracket that we were watching for a few months.
Mm-hmm.
And we broke under. And at the time when we broke this triangle, if you guys can see that triangle, we were talking, obviously with the 60 here, we were looking that to be a false break and not, you know what I mean? Like some people, I'm sure, saw the triangle and saw the break and, oh my God, let's sell it. It's going to 50 or whatever, right?
Right.
Or 35, and it didn't because,
You were suspect about it the whole time.
well, with the 60, right?
Mm-hmm.
The square line here, no, we ain't buying it. So we
Mm-hmm.
ain't buying that story. We're
Right.
buying the crude though. And so, well, here's the proof, right? We came
Right.
down, we hit the square line held. We had a lot of support down here. That's what that buffer line is. We were
Mm-hmm.
kind of expecting a false break. Doesn't have to be there, but that would have been cool. Now we're getting back into the sort of little consolidation box. So we'll
Mm-hmm.
see what happens here. Key is 73.50. If we can get in here and establish, I think path should be higher. Let's watch, see what happens.
Yeah, for sure.
So far, it's been behaving properly, I would say.
Agreed.
Gold just
They
can't give it
cannot,
up, eh?
they can't push it down, man.
So we had a perfect quarter square correction, and we're
Yep.
back on up.
Yep.
I would say, well, the square is a square, till this gets taken out. I'm not, all that bullish to buy it right under a square once it's squared out. So let's see
Right.
what happens here. I mean, if you're long from the early places, this is just fine. No big deal.
Right.
And you can also see how strong we're holding above 1 by 1 line. So everything's pretty good. Let it consolidate. Maybe it'll just consolidate. This is still a very tight consolidation. Quarter square is nothing, it's just it's probably one of the most bullish pullbacks you can have outside of the 1/8. So
True.
yeah, this is looking, yeah, it's looking fine. Let it finish up the correction, and obviously this was a correction low, the quarter line, but
Mm-hmm.
let's see what happens. Maybe it'll give us another higher low. The main thing was we saw the square coming, we called that out. Now we have a correction. Now we're letting it sort of finish up the correction. Is that a good way to put it?
Absolutely.
All right, we'll go with that.
But you like to see that kind of action like today, man. A big up bar after it, hit that quarter line. Boom.
Yeah, and nobody's, you can see traders aren't shy about buying gold,
No, they are not.
so it's looking good. And the part of why I'm a little shy is obviously the square up here. So it's 2704, 135 up. Yeah, look, it's a critical kind of a level, and obviously, it stopped gold for 2 weeks, 3 weeks, so that obviously this level is not a pushover.
Mm-hmm.
And so we'll see, how we handle that. Looks like a little bit more correction until we get on top of it. And gold always kind of does this little bit of a thing when we get to key levels. So anyway, it's all right. But whatever we talked about gold, it's all holding together and it looks fine. And then we move on to copper. Copper is correcting. We talked about this new bracket being, lows, if we can hold above this 430, and that's a quarter square. And so let's see. So far, it's okay. I would say under the 50% square, which is 454, copper's a little weak, but depending on your time frame, in the bigger picture, we're doing great.
Yeah, really bullish.
Right, the 60-degree line held, so holding here was the 405 area was amazing. So this correction, see the normal, I would say just let it finish doing what it's doing. Maybe it'll get down to the 430 level, fine. Let it finish up, because nothing just goes straight up every day. So I think allow copper to have its break so it can run later.
That's right.
All right. So the weekly copper, same story. We stopped at the 50% level. Even if we came down to 144, it'll be just fine. So we're just 2 bars down. Let it work itself out. We'll see what happens. Let's move on to the dollar.
Look at it sitting right on top of the half square.
Nailed the low. Nailed the low.
Mm-hmm. Mm-hmm.
So if you guys have been watching, we got the low here, right in that zone. Actually, the focus now is at 50%. And what's amazing is look at the last 2 days, last 3 days, really, actually, the last 4 or 5 days, how we stalled right at the 50% level. You can see that, right? I mean, I always want to zoom in.
Yeah, no, you could
It's
definitely
such a cool
see that.
thing to watch in real time how these squares work out.
And you can see how important that level has been.
Absolutely. So we can see, we were up in 3 days, we were under that, and then we shot above and holding above. So there we go, holding above. Long as we can do that, I mean, now we can even hold above these old lows back, 102 and a half or so. We're still good. Very strong trend, very strong, a lot of buying going on. And well, we're always bullish the dollar. So
And
yay,
you know what's ironic, Barry?
we're good with this.
The
Yeah.
news is the dollar's going to get trashed because, the Fed's cutting interest rates and blah, 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 blah.
Mhm.
And look at that.
Well,
They just
this
jammed it up for 5 days.
exactly. And I was thinking the other day, this is like really some little piece that I just, once you hear it, you're going to go, oh, yeah, that's obvious. It's one of those things. The thing is, when we like the thing that you said, a lot of people like, oh, Fed's doing this and therefore the
Hmm.
dollar is going to do that.
Hmm.
And the other thing and the rates. I mean, that's just one narrative. There are lots of other ways the dollar could go up or down.
Hmm.
And so that's what I'm saying. Like there are a lot, I can think of, at least two or three scenarios why the dollar should continue to go higher, but we don't have that evidence today. You know what I mean?
Yeah.
So, so we'll see. And people that stick to one narrative without keeping it open will always get caught, at
You
some
get
point.
because you blind yourself to other possibilities.
Absolutely. That's exactly it. And we talk about that a lot. And so here, whatever price is doing in real time can't blind us because that's what it is.
It is
Can't.
what it is. That's right.
Right. So holding above this levels we talked about is bullish, and it really is. If we can recover the 50%, is 102.75, 102 and a half level, I think dollars probably going to be doing better and better.
Hmm.
In the big picture, even a violent sort of a pullback down into 101.90, 93 is still fine structurally. I'm just telling
Sure.
you. And holding up in here means it's just extra, right? That's just
Hmm.
extra strong. All right, let's look at the weekly. And why I've been so bullish? Well, because of this.
Just
So,
held, 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 held.
and look at that, right? 90 up from the 2020 lows. You guys know the story. We cover this every week. So basically, this is one of the reasons why we didn't buy the break to the downside, thinking that it's gonna, go lower, and it held, moving higher. Let's see how it does. I mean, the next stop, technically, we can get up into 104 or so. Doesn't mean we can't have some kind of a pullback, right?
Hmm.
But we know the lows are in. I mean, that's really hammered out, man. Tell me about a bottom getting hammered. Look at that, right? I mean,
Yeah.
that's pretty good. So anyway, we're looking for better prices. So let's move on to
The euro. Man, it's barely hanging on by the fingernails to that 144.
yeah, it's starting to slip. I'm
Yeah, it
afraid
is.
the
It is.
109, that 109,400. Yeah, we're starting to lose that. And if we do 108 level, our classic back to the 108 level is really the
Sure.
level we're going to head towards. And this 115, 1150 ended up becoming a good resistant level.
Hmm.
I call it 1150. 1150 held, right?
Hmm.
And we're starting to slip through 109, which means 108 is the target to the downside. I think we can just watch it like that.
Sure.
Watch it. And this 109 becomes a critical level because this time around, once we get below, and if we slip through 108, we could have a rather strong move to the downside. So we got to watch these
Hmm.
levels.
Hmm.
And we could spend some time consolidating in here, either above or down below. We'll watch all that as it happens. But the weekly chart is really the cool chart for the euro. So here's our 108 level. It's sort of it ended up becoming the center of that old triangle that it broke out of.
Yep.
And even this, the break to the upside was sort of a false break. So it seems like so far, we'll see. But basis the weekly 108 is really the critical level. If we get under that, then we definitely have a lot more to go. So we'll treat it like that. 109 and a half, 109.50. We got above, tried to kind of hold above, but it really couldn't do it, right? So we're kind of slipping back through, and we'll see how it handles 108. So these are like the zones where we're watching right now. It just looks like 108 seems to be the next area, next level. All right, those are the main ones. Are you going to cover? Are you looking at natural gas?
No, it's correcting.
Yeah, let it finish up, right?
Yeah, let it finish.
Where?
Especially weekly, monthly, they just pulled right back into the triangle. So let's let it finish up a little bit.
All right. And the only other one I want to look at was the Hang Seng, which really.
Oh, if we get stuck below that half.
Yeah, yeah. Look at that, right? We came
Hmm.
down to, of course, the 22,709, 710, let's say, area held.
Yep.
Came back right down to the 203.80 area. I mean, that area held. So the bracket seems to be this quarter square,
Hmm.
right? And of course, if that's a bracket, the midpoint is just so happens it's
The
50
half square.
square.
Yep.
And that level would be 21,000, let's say 550.
Hmm.
So that's it. So it's 25,550. If we can get above, I think we can continue to go on. And I think consolidating above this 20,380 is super positive, very, very healthy.
Yes.
And if we get, I mean, in general, right, being above this 19,450 is actually good. You know, it's
Hmm.
not blistering bull market, but it's okay.
Sure.
Anything above the square is okay at this point, since we just cleared the square after putting in a low back in early part of the year, right? So
Hmm.
we're taking it from there. Now, the fact that we cleared this and almost reached 144. So I feel like we're on the way. And this is sort of the areas we have to watch. Just watch those two levels.
Yeah, you just got to stay above that 72 and you'll be all right.
Yeah, in the long haul, but this is really the area to watch.
Hmm.
And in the short term, this is the bracket, and 50% will be that'll key you off in which direction it's going.
Hmm.
But I wouldn't be surprised if it consolidates here. It's a nice place to consolidate.
Sure.
All right, that's all I have. Let me put it to you and
Okay.
cover all the
Very good.
commodities. And yeah, that's all I have. And if you guys like our work, please like the video and comment and share and subscribe, do all the things to help grow the channel. And we appreciate that.
Yeah, that's all we ask.
Yeah, not much, no t-shirts. We should get some t-shirts and hats, man. We have a cool logo.
Yeah.
Yeah, that'd be kind of
Yeah.
nice, right?
It would be fun.
Let us know if you guys would buy a t-shirt or hat with our logo on it. Just for fun, we'll just
Oh,
sell it at cost. It'd be just
yeah. Yep.
all right. Let me put it back to you.
Okay.
All right. So there goes that trend line we were watching, just talking about a couple days ago.
Yeah, exactly. So we pushed above it, but you showed the Dow and the S&P futures, and here looking at the NQs, which one of these is not like the others?
I don't know. No new highs, man. What's up?
No new highs. That's it. And
Mhm.
that remains to be sort of a fly in the big bull market. Oh, we're going to take off from here. This was leading. Remember, this was the darling. This was leading,
Mhm.
and we haven't even come close to making a higher high yet.
Right.
So until that happens, this market is suspect, right? You gotta look at this in a very suspect manner, because if we turn down anywhere in here, you'll have a lower high and potentially catch, that fast third leg that we like to catch. In the meanwhile, until as long as we're above this 20,000 level, we have the possibility and the odds favor us pushing up to challenge the highs. We're holding it. We did a pretty big battle for the last week or so, and now we're pushing up. Let's see if we can get up to this full square, and are we going to make a higher high and be able to sit on top, or is it going to be a false break? We don't know. First thing we have to do is see if we can get up there.
Yep.
All right, let's take a look at the weekly. The weekly's showing a very similar picture. The interesting thing here, Barry, is we had, two up weeks, one down week, and now an up week. So we're doing this up, down, up, down, up, down sort of thing. It's hard and you can see this is really sideways movement for the last,
Mhm.
3, 4 weeks. So we want to see this thing push and challenge this half square, which would be at the all-time highs. That's the thing that we want to see, but it's struggling, and you can see it in the chart. You can see it in the price action. It's just not moving well yet. Let's look at the monthly. Monthly, we're still inside bar for this month so far. We had an up bar last month after a down bar, and now we're inside. And just like the weekly, we're going to be pushing up into a full square. So it there's a lot of overhead and a lot to get through for the Nasdaq right now for the NQs.
Mm.
before you can call it like all clear. Hey, next bull market's going. Anything you want to add here on the NQs?
No, we're good. I'm watching carefully. Really want to see if we can make a new high. Maybe we go up and do that next week. We'll have to watch and see, or
Yeah,
going into the
and
end of the month.
and we were talking about cycles. There's a big cycle that I follow, the Rebel Yell cycle that's coming in next week, end of next week, and
Mhm.
that is sort of the culmination of this wind cycle window that Barry and I have been talking about. So it's really important. We'll spend a few minutes, having Barry talk about his strategy when you get a big window like this and a big hit coming up. But that's end of next week, so we got to keep that in mind because we're going to most likely get a trending move in many markets coming out of this, and we want to make sure we understand, where are the important levels that tell us, okay, what's the direction we should be trading. As you showed, Barry, with the Dow and the S&P cash and the ES futures, the direction right now is up, and it's looking up. So are we going to run up into the end of next week and make highs? Then we'll be looking for technical signs that show us, okay, that it's deteriorating or it's going to accelerate, because that's really what this cycle window is going to be about.
Mhm.
Let's look at our friend Bitcoin. Bitcoin did a very interesting thing. It was looking weak, coming into the end of this week, and then today we get this big bar that put us back up above this critical level, this 62,035. That, to me, that's key. We want to close over that, stay on top of that, so we can keep potentially pushing high,
Mhm.
pushing towards the highs. Otherwise, you can see kind of this full square has been the balance point, for this whole 7 month correction. It's
Yeah.
basically been a two square correction, right? Here's the high, here's the low. And we've basically just been rotating around this full square here, this 180. So settling above it obviously would be a very, very positive development for the bulls. If we get stuck below it, then you got to look more at the bearish case, and then we're going to come in here and test support down here, down at the 90 probably.
Mhm.
But for now, it's not giving it up, and it's pushing and trying to hold that balance point. So I still think, by and large, the weight of the evidence is still bullish here, because we're doing this 7-8 month consolidation up near the highs.
Mhm.
Anything to add here on Bitcoin?
No, I mean, it's been kind of sloppy and we're kind of in the middle of the range. So really, we want to see it kind of commit to one side or the other through the square and
Yeah,
start moving, right?
want to
Just
see
feels
it
like a
break
one
out
big
of here.
correction, the entire thing.
It is. It's a giant two square consolidation slash correction, for months and months. But we know when you have months and months of this sort of thing, you're building up energy for a pretty big move.
Hmm. Yeah,
So
yeah,
we
sure.
want to pay attention and watch for the correct break. And when we get it and clear it, that's the direction to trade.
Mhm.
And it should move. It should move well. All right, let's quickly talk about the commodities. We're going to cover in-depth sugar, in-depth silver. Since Barry covered gold, copper, and crude, I'm going to just show you monthlies on those, because I want to show you a few things on those that I think could be helpful and informative. On the grains, we had one of our followers mention the grains this week. I looked at them. I said, okay, I'll put them on the show, but they're still correcting. They're
Mhm.
bullish, very bullish long term, as we've talked about, but they are correcting and pulling back. Like wheat, an ABC down is in progress. It's kind of sideways on the daily. Corn, the same thing. 4 hour ABCs is going on. It's pulling back on the daily. Soybeans are correcting. Let's let these corrections finish out. And then once we get some reversals, we'll put them on the show and highlight them and show you, where the good risk reward is, and update the charts. But they're still very long, bullish longer term. Just for now, they are correcting and are essentially sideways.
Mhm.
Let's go look at one that we have been talking about for a while, and we've left it off the show for a little bit because it was correcting and sort of fixing the path, and that's sugar. But what we
Yeah.
had today was a nice little reversal bar here on the daily. So sugar, we isolated this low. We had a little three drive. We had a false break. Good move out. First pullback gave us a higher low, and then we got the big move. We've done an ABCD down, and now we've got a little reversal bar here today on a daily reversal. So sugar looks like, and you could see we would have been bullish pulling all the way back to here,
Mm,
right? Sitting on top of that high before the low.
mhm.
And we've reversed, even above the full square and well above that low, whole quarter above that. So uh, it looks like this is going to be bid again, and I think sugar looks good. Let's show you the bigger picture on it on a weekly, monthly basis. Here's your weekly. Notice where we're holding.
Yep, right above the square so
Yep,
far.
right on the square so far this week. We had basically a 2 week correction. Now let's see if we can stay on top of the square and push. Also, after a breakout of this one by one from the high,
Hmm.
basically came down and tested it, and it looks like we're holding it and doing it successfully. Let's look at the monthly. Monthly shows something similar. We're sitting right here at the full square. This bar is inside so far, but if you look to the left, Barry,
Hmm.
look at where the pullback, where we're stalling a little bit right here.
Yeah, yeah.
Right at the previous high. So this is a logical spot. We just want to see us hold this and then push. I put this ABCD on to see where the target would be. Just if we did a simple ABCD up, basically puts us right at the highs from 2010, like 36, $37 sugar.
Hmm.
So I think that's a reasonable target from here if we are in fact doing the next leg higher. Anything you want to add on sugar?
Well, I think it already got started, came off the lows back in August, and now it's just really doing exactly what you're saying. Watch the counter trends, and you trade it in the correct right direction, which is long.
That's correct.
Yeah.
All right, let's go
And
look
it's
at
good timing to show you that because nice little ABCD correction. So
that's right. I mean, that's what you want to watch. You want to watch like nice corrections where they pull back into some sort of support, and then you can trade the long side with a good risk reward ratio. Because if you're wrong, okay, if you're entering here after the reversal, if it takes out this low, you get out.
right.
So you got a nice risk reward ratio because the upside once we get above this half square is the full square up here at 25.
Mhm.
So there's a nice potential move there. Let's cover silver and then we'll just do the monthlies of the other three. So here's the silver daily.
Mhm.
The hesitation we had when silver was making these highs we had some time counts and some cycles that came in. We said, we should get some kind of pullback. We had this little false break. We got a pullback. Look where the pullback came to,
Mm.
right to the full square, right? Where we had these highs here, these highs here that we could sit on top of, higher low from here, and we reversed. 2 nice days. Looks like we're going to be closing near the highs for the week, which is always
Mhm.
a nice thing to see. So trading against this low on silver looks promising. Let's look at the weekly. Now the weeklies shows where the key level is now. It's 32.
Yeah.
A weekly close over 32 gives us the possibility of sitting on top of this, which will open up this next square up here. And
Mhm.
that would put us in a position, where we're looking at the half square becomes the next target, which is, over $34, 34.30. But it opens up this entire square, for higher prices. But again, look where this consolidation and this sort of congestion is taking place.
Yep.
It reminds you of gold, right? Remember we were talking about gold for the longest time when it was frustrating everybody and going sideways. It was doing it near the highs.
Hmm.
And we just said, hey, be patient. This is a correction. Once this thing gets moving, it's very bullish to consolidate near all-time highs or
Right.
near, multi-year highs.
Hmm.
And you can see it even more on the monthly here. I mean, and look at all this right here,
What a
right?
breakout, huh?
Yeah. And we already have a higher bar,
Hmm.
for so far for the month. So that would be, 2 straight months of higher prices. after we came down and corrected right to the full square. But you have
Nice.
all this, 4 or 5 years right here of
Mm,
price action that you're sitting on top of. It looks like we're heading up towards the half square, which is right around 38 on a monthly basis. And then we take that and then we're going to the highs from 2011, 40, 49, $50 silver. And if we look at the timing, low to high here was 90 months. If we
uh-huh.
did 90 months, it puts us into 2027 where we could get some sort of high if we do, low to high again. Something to consider. Anything to add on silver?
No, we're good. Everything's on course.
Yep. All right, let's take a look at the monthlies for three of the charts that Barrie covered. First one, let's look at gold. Now, why is this interesting? It's a couple reasons. A couple reasons. We're stalling at this, at a full square. So it's
Mhm,
it's understandable, just like Barry showed on, I think it was on your weekly that we had
mhm,
resistance there around 2,700. Here we're right near where price is around, 2,675. The
mhm.
other thing is look at this circle. Like this was a really nice circle that worked, got us this acceleration in 2020. We fell out of it. A lot of times you get steeper moves. This one kind of went sideways, but you can see it sort of killed the uptrend.
Yeah.
Here, we're going to be at a decision point fairly soon. And the decision point is, okay, are we going to start a fast move lower along this outer edge of the circle, or are we going to break out of the circle and really accelerate higher?
Mm,
And that's possible. That's the way these circles work. When they're containing price, it may do a correction here for a little bit, but then once it breaks out, and if especially if we do it above this full square, you're talking about 2,900, 3,000 gold
yeah. Yeah.
just following the squares. Time counts, we are getting some time counts near the high. Um, from the low in 2022, we've got 22 months at the high.
Hmm.
We've got 72 months from the lows in 2018 and 108 months from the lows in December of 15.
Mm.
So it's going to bear watching. The good news is with the squares that we have, we'll get an early warning on the dailies, on the 4 hours, on the weeklies. If we start failing at these full squares, we'll know, okay, something different's going on. But as long as we keep capturing these full squares, odds will favor that prices are going to continue higher. Any comments here on the monthly?
Looks good, but you're right about the counts. We definitely have to keep an eye on that.
We want to keep an eye on it, right? And
Yeah.
and the
Yeah.
best way we can keep an eye on it is by watching those key levels and see how
Mhm.
price acts around them. All right, let's take a look at copper. Here's your monthly on copper. This is another one that is sort of the lesson we learned from the consolidation of gold. So here are your highs in 2010, 2011, 2008, and look where price is now. We pushed up, but yeah, everyone's like, "Oh, copper's too high. The economy's going to collapse, and copper's going to go down." But look what price is doing.
Yeah.
It's staying right near the highs. Again, there's time counts, low to high, 22 months. 1 month off the high there, and low to high here. We've got 270 months, which is a pretty good count. So we got to watch those. The key level monthly basis is this call it 428. As long as we're above that, as long as we're in this area, it's a repeat of gold, right? We're doing it at the previous all-time highs. And that is not bearish. A consolidation like this going sideways at previous all-time highs is not a bearish thing. So that's copper. Any comments on the monthly here on copper?
No, we're good. Good coverage.
All right. The last one we'll look at is crude. And look at this, Barry. I found these circles. These are really interesting to
I
me.
like that. It's good.
Yeah. So this is a circle that we had on years ago. And the key point here is, it was capturing prices on these big giant moves. Then we got the acceleration up, Then when it broke out of the circle, this is what can happen sometimes with these circles, right? You get an amazingly fast move down.
Yeah.
And that's your COVID crash in crude, right? So then I put a smaller circle on this and said, oh, look, I'm catching this here. I got the bottom. What does it do on this side? Well, it's catching this triangle, right? The top of this triangle.
Mhm.
So what's the possible paths here on crude? Just looking at the circles. Well, we bang up against this, we get stuck and we accelerate down, right? Where we get a strong sell-off in crude. That's possible. The other one is it breaks out of the circle and you get a fast move higher. Sort of
Mm.
the inverse of this move, right? Where we were going up on the circle, broke out of it and came down. Here we would be coming down on the circle, breaking out of it and going up.
Right, right.
And the key spot for us to watch is the 60 here at around, 71 and three quarters.
Mm.
Above that, the odds are, as long as we stay above that, the odds are we're going to break up out of this circle and have an acceleration move higher. If we get stuck under this, then we can say, okay, the path of least resistance is going to be lower. The circle just adds to the sort of the analysis that Barrie did and the way we are looking at crude, which is there's a massive move coming in crude. And being able to know what the levels are that give you the direction when the move starts puts you way ahead of the game, right? You know, if we're above this 60, when this thing starts moving, we know the acceleration is going to be the upside. If we've been stuck here below this for months, we know the odds favor the move is going to be down.
Yeah, exactly.
And so I think these circles just reinforce the triangle which we've been looking at, saying we know what happens when these commodities triangulate for months and in this case years. You're building up a lot of energy for a massive move, and the
Mhm.
circle is just confirming that.
Right, right.
Any comments on the, I know you're the king of the circles. Any comments on the circle here?
Well, it's a good circle. Let's look for the break. I think it's a good, these are all good to watch. Like I had a circle on the other chart, which was catching sort of all the lows, look for the
Oh yeah,
acceleration.
yeah. Your big one. Yep.
And this one is good because it's catching the upper side of the break, right? Very precise. So we'll see.
And
So
the good thing is we're not going to have to wait years for it to happen, man. It's tight, right?
no,
You're
no,
talking about in the next 3, 4 months, this is going
yeah,
to happen.
yeah, yeah.
So it's an interesting thing. So Barrie, let's quickly, I know we don't have a bunch of time, but let's quickly talk about, we have this big cycle window. The Rebel Yell cycle's coming up here sort of at the tail end of the window.
Mhm.
Again, for people who haven't, heard us talk about it, how do you handle the cycle windows when they come? What are you looking for in the markets? What are you trying to do to be able to decipher, okay, what's the effect of the cycle on a particular market that you're watching?
Well, one of the things it's a little bit like what we do on the show. I like to look at it from a couple of different angles. Like let's say the Rebel Yell cycle, right?
Hmm.
So we know that's coming up next week, after end of the next week, right? End of next week.
And yes, end of next week.
So it'll be the week after. So I'm looking at time counts, I'm looking at squares, I'm looking at all the different things to tell me, so to confirm through other tools, other reliable tools, because cycles, they always get pushed this way or the other way. They can get inverse, they can get inverted, they can do, cycles do a lot of things. Again, like we've been watching, it can get pushed into a bigger cycle that's going to expire at some other point.
True, true.
So because of that, but we also know when the cycle's hit, and if you catch it just right, you can ride the entire leg. So it's just about preparing for that and looking for other evidence to show up along the way. But even that, I was telling my son the other day, even that, when we're talking about cycles, you don't even have to be that prepared, long as you know where it's going to happen. I mean, theoretical point, right? Like we know it's the end of next week. So once you know that, even following that week, if your systems are giving sell signals, you have a much higher probability of those setups working out on the sell side than not,
Mhm.
because we have a cycle sort of, pushing behind it. It's like the tide.
Right.
And so I look at the cycles like the big tide, and you want to ride that wave, but you also want to make sure It's not noise. So I guess a lot of the work is about, I mean, our work is always about separating the noise from what's really happening. So what I do is that I look at different tools, different squares, different counts, and I look for the market patterns to change, the structure, the volatility of the bars to change.
Mm-hmm.
And well, we talked about this a while back, right? It's just a basic change in the character of the market, right?
Exactly. So in other words, let me summarize it and then you can comment on the
Mhm.
on my summary.
Mhm.
You're saying that, like you always do, the technicals are the most important thing. Like, what's the structure? Are we getting higher lows? Are you getting higher highs? Are you getting lower highs?
Mhm.
What is the technical structure of the market? And because, like, in this next week and a half or 2 weeks, when we're looking at prices, we know a week before, a week after, we say you're going to place even more emphasis on that as potentially being the start of or the continuation of a move that's going to trend. Is that a fair assessment?
Yeah, that's exactly what it is. Now that's exactly it. The
Hmm.
the the thing is there's so many ways to do that. I'm sure everybody watching, they all have their own, way of sort of formulating that. So the idea is to, again, you go back in history, you want to look at highs and lows and see where you got your first signal based on your system. I mean, that's one way to build trust, right? You look at
Hmm.
corners, and it doesn't even have to be on squares or squared out or anything else. Just look at the highs and lows that are already there, and look to see where your system triggered buy or sell. And by looking at that, you'll have a fairly good understanding of how your system behaves. So that's the other thing. We really want to understand how your system behaves around corners, around consolidations, around the midway through a move, like the fourth wave consolidations. And you want to really understand all of those things. Then when you're looking at big cycles coming in or not, we have a reference point. We have a reference. We know how the system behaved before. We know how, so we have at least some little bit of a predictability just around how our system works. I think that's the thing, right? You need to have confidence in your own system,
For
and
sure.
then you can handle whatever that comes. It's like captain and his boat. So
Yeah, yeah, and I think it's important that people understand it's not you're not forcing the cycle on the market. You're looking at what's happening in the market and then taking that into account in context of the fact that you're in the cycle window. And so
yes.
it
Mhm.
gives even more significance to, especially when you detect a changing character in a market in one of those cycle windows. You could say, okay, I see that in my system is telling me something has changed. Like it was doing X and now it's doing Y. It's in a cycle window. That's big, right? That means it's not just a hourly or 5 minute thing. This could be a bigger trending move here.
Exactly. And one of a good example of a little peek into how that works, at least from our side, is when on the 30-minute, like we comment every day, we talk about, hey, if we can hold this level, it'll be good. If we can hold the other level, we talk about different levels. If can we get above, hold above, or can we get stuck under? And the reason we do that is depending on that level on the square where we break above or not, or stuck, get below and get stuck, they have different meanings. So if the market's operating normally, let's say the leg that's continuing, we know the corrections are have a certain character, certain measurement, right? Certain degrees.
Hmm.
And if that gets broken out or disturbed or kind of morphs into a different vibration, meaning a different character, right?
Hmm.
Then okay, something's different. Now we have to really look at that. So part of it is using your levels and things in a way to help you frame what might be coming. So so to put it all together, if end of next week we're looking for some kind of a cycle high,
Hmm.
then I'm watching everything. I'm also watching price behavior, right? So let's say, so you have 57, this is just for example, you have 57.51.
Yeah, right there.
And let's say that cycle, let's say the cycle is tomorrow. So I'll be watching to really see, well, how is the price behaving around 57.51? And if this is a normal correction, I would say we should hold above 57.51 and continue. So it's not a big deal to get all excited. But if we somehow get below and we get, volatility kicks up and we try to tap 57.51 from below and can't quite make it, that's where it starts to lean towards evidence.
That,
Okay,
hey, that was a big turn, right?
exactly. Something's
And
not quite right. And now we're seeing a pattern that's pointing more towards prices getting ready to slide,
the
as
the,
opposed to
re the
fall
reason
down.
I threw up ES is the last time we had a rebel yell cycle hit and some time counts was here on the 17th of July.
Perfect.
And we
Mhm.
saw what we were doing going into it, right? So that's okay, here's where we are. How did we get here? And now we have the cycle hit, and then look at the price action, how it changed.
Mhm.
And then we said, okay, we took out a low here. We came down, we made a lower high, and then you start saying, okay, the character has changed. Now maybe my direction should be changing.
Yeah.
Within your system, you look at that. But this window gives you a point in time to look for those things because they are more significant when we have a window like we're having
And
now
that's,
and next
yeah.
week.
And that's a good example because that's where that 90 came in. And
That's
we were
correct.
we were watching it very carefully. We were saying, well, we have the Rebel Yell cycle, we have the 90, looks
Yep,
like it's a go. And then I think we caught it at the 30-minute level because you're already ready and you can start, evidence starts to flow at the lower time frame. So
that's right. You don't have to wait for a daily, but
but you
that's
can,
exactly the point.
obviously, even if you wait for the first counter trend, you did fine, and your
Yeah,
risk was very low.
right,
So yeah,
right.
and we're kind of up, man. You just when you showed that leg, it was like a flashback. I was looking at all the consolidation.
Yeah,
Look how
that's
much you
right.
had to go through
Yeah,
to
yep,
get to that high. And,
that's
and
exactly right. But that's a perfect example. And so we always try to open your eyes to those windows because it's a time when you look at the daily bars, you look at the context of each bar because you're looking for those subtle changes that tell you this thing has shifted because you have that time window that's saying, hey, there could be a shift in this window.
yeah,
And the bottom line is we're coming up on one of them, and now you understand
yeah.
why
One
it's
other thing,
important.
Ben. The other thing I wanted to say was another way to confirm these things. I'm sure all you guys are doing something similar. Is like we don't use indicators per se, but you can use some indicators for divergence because a lot of times when a high comes in, the final high,
Hmm.
especially if it's like a false break, will definitely show some kind of divergence because of the momentum, right? So you
Very
can
good
see
point.
it in that way too. So that's another way to confirm after the fact, like after meaning a couple of days,
Sure.
within a couple of bars, you can tell what's happening there. So that's another change in behavior, right? You don't get divergence normally. It only happens at certain points. So, and if a
Correct.
cycle is in there at the same time, then okay, now you have two things.
Yep. Well, listen, Barry, great show, terrific coverage. We know we're coming up and we're in this critical window. We got the Rebel Yell at the end of the week, so that add that to the mix, everybody. Rest up this weekend, be vigilant. Please continue to subscribe and send the link to your friends. We really appreciate your efforts this year and helping us grow the channel, and it's been fantastic. And have a good weekend, and we'll talk to everybody next week. Take care, Barry.
Thanks, Ben. Good job. We'll talk to you later. Bye bye.
Bye.
Bye, everybody.